Okay, let's get right into the stock market technical analysis. We're going to look at the charts. Been kind of scanning around all morning, and I just haven't seen a whole lot. So I'll give you guys a quick update, and we'll just wrap up. Relatively quick video. We are seeing some interesting things in healthcare, so let's take a look at that. But we'll start off today with triple Q's tech sector. Again, really, we want to look at the hourly chart now and narrow it down. A couple things on the hourly. So we've got the most recent lows that over the last couple weeks are right down here at about this 318.30 area. If we head back down there, I think it'll break, and we should start to really make a lower prices. Recently, as I zoom into really where we're at right now, we have potential bullish divergence. You'll see here on the RSI and the PPO, both have on the hourly bullish divergence. We made a new lower low right here, so that is bullish divergence. We got to see this get taken out. Obviously, if you're going to head down to this 318 level way down here, then we're going to have to burn through this divergence. So need to see more selling and really just take that out. That's kind of the next step that I'm really looking for if we're going to head lower, is to start to sell off and take out these divergences, okay? So that's all I really have. Otherwise, we could rally. There could be a rally right here, and I think we're going lower. Again, longer term, bigger picture, if you look at the daily and the weekly, they're all pointing to the fact that we're starting a downtrend. So that's why I'm leaning towards the downside, but I just want to point out what I'm seeing on the shorter time frames. You guys can be the judge. I'm remaining short right now. SPY. So here's your S&P 500. We're basically trading down near the lows. And if you look at the hourly here on SPY, we made a slightly new lower low. And sure enough, same thing, kind of this mild bullish divergence on this hourly chart. So we need to see the selling really, maybe sell off into the close or open tomorrow and sell down. We need some selling right here to take out these divergences. Otherwise, we're likely going to get a rally. One thing you could watch, there's a potential uptrend right here on the SPY. And, if you break to the upside, you see some sort of a bullish breakout, that likely would be a signal that we are going to get a rally. So if you see that with the bullish divergences, potential for a rally, at least in the short-term time frame. All right, going back to the daily. Again, I still think we are heading lower. All right, we had a clear rejection off this trend line right here marked in red, and I've had this trend line up here for years, and it's a very obvious trend line going on the weekly chart all the way back to 2008 basically. You'll see here 2009 on this weekly support all through here. There was support. We finally broke trend in 2018, and the Fed stepped in and tried to pump the market back up. And they did. And then we ran right into resistance right before the COVID crash. All right, that was a technically based sell-off, and the catalyst was COVID, but technically it was right at major resistance. So all the algos flipped to sell. The Fed stepped in again. They've been pumped the market up, and really you can see where it's been holding for 2021. For all of 2021 was right there. We finally broke with the sell signal, and there's your rejection again. So looking at a downtrend, I think there's more downside. We just need to kind of let things play out. Okay, gold continues to look okay. This is gold bullion here, and we'll flip to the daily chart. Continues to really hold this support level, but we're not seeing really impulsive buying, but we're still kind of holding support. The one thing that I don't like is this GDX. I continue to see negative divergence that's continuing to build. So each one of these new highs, you can see the negative divergence where we're just making lower momentum. And then if I go to the hourly chart, we're clearly climbing up this trend, but we do have negative divergence here on the hourly as well. So you can see right here the last high that you made, and here we are right there. So yeah, it's just giving me a little bit of pause, and I'm definitely watching it. So we're keeping an eye on how this plays out. Looking at some of the miners like Barrick Gold, I've got kind of this wedging pattern, and then this Agnico Eagle bearish rising wedge pattern right here on the hourly chart with the negative divergence. So definitely bearish setups, and it doesn't mean that we're gonna sell off, but we definitely have some bearish setups. I'm just keeping a very close eye on it to see what we get if we get some sort of a pullback, and that might come with a swift move down the market. Maybe the miners sell off with that. I just don't know. So in the short term, I'm staying with my positions, but I'm definitely just watching it a little closer. Financials, XLF, you can see we're just, again, they just keep trying to hold this 37. We're at 37.02. So, again, that's just a key level to watch. Here we are today. They gapped it down, rallied it up, and we're just really holding that 37 area. And as I roll back on the daily, you can see all the tags where we've really battled that out. So we need to see 37 get taken out definitively, not just by a couple pennies. You know, we really do need to see a nice breakdown of that 37 level, and that should be a signal that you're probably going to see an S&P 500 sell off at that point as well. You'll probably start to see the selling, you know, recently has been limited mostly to tech, but you'll start to see that selling broaden out into the broader market. We're seeing some of that today in the healthcare stocks. So here's healthcare down 1.5%, relatively good move in the indice here, and healthcare has been where a lot of everyone's been kind of hiding out for safety. And so if we're going to see these safety plays start to sell off, and then you look for financials to drop, then we're likely going to get a broad-based sell-off in the market. So something to look for there. Individual trade ideas, ABBV. I've talked about this one. I did short this one. You can see we go to the daily chart here. We had an uptrend line here clearly on the daily. Negative divergence on both RSI and the PPO. And we got a sell signal 2 days ago, right there, breakdown of trend. All right, the following day they rallied it up, kind of low counter trend rally. You see those oftentimes the day after, but didn't really shake me out, and it just was an opportunity to really add to the short position. Flip into the hourly chart here, you can see the breakdown, rally back into resistance, and then continuing lower. So going to the daily, I don't see any support till we hit 150.96, 151. That's basically our next level of support. And then we've got a level of support here at 138.14. And possibly a final level of support. Well, we got the 200 as well, so somewhere down there. But we're just going to watch these first two levels for now. Still looks good for a downside trade. UPS. This one, again, we had a sell signal back here on April 5th. I pointed that out on this channel the day that we got that sell signal. We had a clear uptrend line. We broke trend. We had negative divergence. Everything we need to see for a trade. And your sell signal came right there. Since that sell signal, even if you took it pretty much at the close, this thing's profitable by about 5-6%. And looks like there's more downside to come. So I don't see any real support till about 177.75. That's pretty decent support right there. So we'll likely cover our trade on UPS right there because you're probably going to get a bounce. And then, we will probably head lower, but likely going to get at least a short-term bounce down there at that 177.75, 178 area. And just a quick look across the commodities. They continue to push higher. So, again, this is just going to continue to put pressure on the Fed for rate hikes. They're going to have to continue to talk hawkish and try to scare the market down. They're really trying to scare this commodity trade down is ultimately what they're trying to do, because this is where the real price inflation comes from. The price increases is the raw inputs, these commodities, oil and ag commodities. And so as these continue to rally, it's just really giving you kind of proof or a strong indication that the Fed is going to have to continue to talk hawkish, continue to scare the market in any way they can, continue to hike rates however much they can. So that should continue to put pressure on the broad market in general, tech stocks for sure, and the broad market. So, guys, that's all I have for today. There's not a whole lot going on. So, again, I'm just sticking with a lot of the trades that I've got on, shorting the small caps, IWM, shorting triple Qs, shorting some of the semiconductors. I'm short Tesla, GameStop, short UPS, short UNP, and long some of the gold miners, although keeping a close eye on those gold miners. We could get a better buying opportunity. Again, gold to me looks like it's buy the dip. Doesn't mean, so maybe we get that dip and it looks buy the dip, and then the tech sector especially looks to be sell the rip. So shorting rallies in tech, buying dips in gold mining stocks and commodity trades in general. Okay, drop me a thumbs up. Check out my course if you guys haven't done so. Link in the description below, and I'll catch you guys tomorrow.